Unshakeable, Your Financial Freedom Playbook by Tony Robbins, book summary in English. Hey everyone, and welcome back to Power Books. If you're here to gain an edge in the markets, unlock robust financial wisdom, and build lasting wealth through smart investing, you're in exactly the right place. Today we're diving into a book that's more relevant than ever in uncertain times. Unshakeable, Your Financial Freedom Playbook by none other than Tony Robbins. Are you tired of feeling vulnerable to market crashes? Do you worry about economic storms sweeping away your hard-earned savings? Tony Robbins, armed with insights from interviews with over 50 of the world's most brilliant financial minds, from Ray Dalio to Warren Buffett, gives us the blueprint to financial peace of mind. He reveals how to navigate any market, avoid costly pitfalls, and ensure your financial future remains, well, unshakable. We'll explore how to spot opportunity in chaos, protect your wealth from hidden fees, and master the psychology of investing so you can build true, lasting financial freedom. So, if you're ready to gain clarity, confidence, and a strategic advantage in your financial life, hit that like button, subscribe to Power Books if you haven't already, and let's get unshakable. Introduction by Steve Forbes, Forbes magazine. This introduction, penned by Steve Forbes, serves as a powerful endorsement of Tony Robbins' Unshakeable, lending significant credibility from a prominent figure in the financial world. Forbes likely sets the stage by acknowledging the widespread anxiety and confusion many investors face in an increasingly volatile global economy. He emphasizes that while the financial world often appears complex and intimidating, there are fundamental principles and actionable strategies that can empower anyone to achieve true financial security. Forbes praises Robbins for his unique ability to distill the wisdom of the world's most successful investors and economists into a clear, accessible, and motivating guide. He highlights that Robbins is not merely a motivational speaker, but a serious financial educator who has diligently researched and synthesized the core truths about investing. The introduction positions Unshakeable as a vital resource for navigating economic uncertainty, offering a path to peace of mind and prosperity that is grounded in proven strategies rather than fleeting trends. Forbes' endorsement underscores the book's promise to transform readers from fearful, reactive participants into confident, strategic architects of their financial future. Section 1, Wealth, the Rule Book. Chapter 1, Unshakeable. Power and peace of mind in a world of uncertainty. In this foundational chapter, Tony Robbins introduces the overarching theme of the book, achieving an unshakable state of financial peace and security in a world characterized by inherent market volatility and economic uncertainty. He immediately addresses the widespread fear and anxiety that often accompany discussions about money and investing, particularly in the wake of significant downturns like the 2008 financial crisis. Robbins highlights that this fear stems from a lack of understanding and a feeling of powerlessness over external forces. The chapter's core message is that true financial security isn't about avoiding all risk or predicting market movements, which is impossible, but about building a robust psychological and strategic framework that allows you to remain calm and confident no matter what the market does. He emphasizes that the unshakable mindset is cultivated by understanding a few fundamental truths about how wealth is built and protected. Robbins promises to equip readers with the knowledge that will not only fortify their portfolios, but also liberate them from financial stress, enabling them to live with greater freedom and joy. This chapter sets the stage for the practical strategies and psychological insights that follow, asserting that anyone can achieve this powerful sense of control over their financial destiny. Takeaways. 1. The primary goal of the book is to help readers achieve an unshakable state of financial peace and security despite market uncertainty. Widespread financial fear and anxiety stem from a lack of understanding and perceived powerlessness over external economic forces. 3. True financial security is about building a robust psychological and strategic framework, not about avoiding all risk or predicting the market. 4. Robbins promises to provide the knowledge necessary to fortify portfolios and liberate individuals from financial stress, enabling greater life freedom. 5. The chapter asserts that anyone can gain control over their financial destiny by adopting the unshakable mindset. Chapter 2. Winter is coming, but when? These 7 facts will free you from the fear of corrections and crashes. In this chapter, Tony Robbins confronts one of the most paralyzing fears for investors, the dread of market corrections and crashes. Drawing a parallel to the changing seasons, he asserts with certainty that winter, market downturns, is an inevitable and recurring part of the economic cycle. However, he crucially emphasizes the futility and danger of trying to predict when these downturns will occur or how long they will last. This chapter's core purpose is to liberate investors from the anxiety of market timing by providing 7 fundamental facts that offer a powerful perspective shift. While the book doesn't list these 7 facts explicitly as a numbered list in the summary, as they are detailed within the chapter, they generally revolve around the following truths. 1. Corrections are normal and frequent. They happen regularly, historically, about once a year. 2. Bear markets are also normal. While less frequent, significant declines are part of the process. 3. No one can consistently predict them. Experts who claim to know when the next crash will hit are almost always wrong. The market always recovers. Historically, every single market decline has eventually been followed by a recovery and new highs. 5. Downturns are opportunities. They represent assets going on sale for the prepared investor. 6. Time in the market beats timing the market. Long-term compounding is the real driver of wealth. 7. Emotional decisions are costly. Reacting to fear and selling at the bottom locks in losses. Robbins uses these facts to dismantle the fear-based narratives often perpetuated by the media, which encourage panic selling. He aims to instill a calm, rational understanding that volatility is not a bug, but a feature of healthy markets. By internalizing these truths, investors can stop being victims of their emotions and instead become strategic beneficiaries of market cycles, gaining significant peace of mind and the power to act decisively. Key takeaways. 1. Market downturns, winter, are inevitable and cyclical, but their timing is unpredictable and impossible to consistently forecast. 2. The chapter aims to free investors from the fear of corrections and crashes by providing fundamental, historical facts about market behavior. 3. Key facts include the regularity of corrections, bear markets, the impossibility of market timing, and the historical certainty of market recovery and new highs. Downturns are reframed as opportunities for wealth accumulation, assets on sale for prepared, disciplined investors. 5. Emotional reactions, fear and panic selling, are identified as the greatest threats to an investor's long-term success. Understanding these truths enables a calm, rational mindset, allowing investors to remain unshakable and act strategically through all market conditions. Chapter 3. Hidden Fees and Half-Truths. How Wall Street fools you into overpaying for underperformance. In this chapter, Tony Robbins launches a scathing critique of the traditional financial industry, exposing the myriad ways in which Wall Street systematically erodes the wealth of unsuspecting investors through excessive and often obscured fees. He pulls back the curtain on what he calls half-truths, misleading narratives designed to justify high costs while delivering subpar results. Robbins' central argument is that the average investor is unknowingly paying a fortune for active management that statistically almost always underperforms low-cost alternatives over the long term. The chapter details various types of fees that silently eat into returns, including management fees, annual charges on assets under management, expense ratios, total annual costs of a fund, trading costs, brokerage commissions and bid-ask spreads, 12b1 fees, marketing and distribution fees for mutual funds, surrender charges, penalties for withdrawing money early from certain products. Robbins meticulously illustrates through compelling examples how even seemingly small percentages, when compounded over decades, can diminish an investor's nest egg by hundreds of thousands or even millions of dollars. He reveals the industry's vested interest in keeping investors confused and dependent on high-cost products. The powerful takeaway is that these fees are often the greatest hidden drag on wealth creation, far more significant than market volatility. By shedding light on these practices, Robbins empowers readers to become vigilant protectors of their money, urging them to prioritize transparency and extreme cost efficiency to maximize their actual returns. Key takeaways. 1. The financial industry profits immensely by charging excessive and often hidden fees that silently erode investor wealth. 2. Half-truths are perpetuated to justify high-cost active management that statistically underperforms low-cost alternatives. 3. Various fees, such as management fees, expense ratios, and trading costs, compound over time to significantly diminish returns. 4. Robbins highlights the industry's incentive to maintain complexity and dependence, rather than educating investors about cost-effective strategies. 5. Understanding and minimizing fees is crucial for maximizing long-term investment returns and is often a greater determinant of success than market timing or stock picking. Chapter 4. Rescuing our retirement plans. What your 401k provider doesn't want you to know. In Rescuing Our Retirement Plans, Tony Robbins zeroes in on one of the most critical, yet often neglected components of an individual's financial future: their employer-sponsored retirement accounts, specifically the 401k. Building on the revelations of hidden fees, Robbins exposes how many 401k plans are structured in ways that primarily benefit the providers and financial institutions, rather than the employees whose money is invested. He argues that most individuals are passively accepting suboptimal plans due to a lack of awareness and perceived complexity. Robbins reveals the secrets that 401k providers often conceal or downplay, which include excessive and opaque fees. These can be administrative fees, record-keeping fees, or even revenue-sharing payments embedded in fund expense ratios, all of which chip away at returns over decades. Limited, high-cost investment options. Many plans offer a narrow selection of mutual funds, often proprietary or actively managed funds with high expense ratios, instead of access to low-cost index funds. Lack of fiduciary responsibility. Historically, many 401k providers were not legally obligated to act in the best interest of the employee, allowing them to push more profitable for them products. The chapter provides a vital roadmap for rescuing these plans. Robbins strongly advises participants to actively scrutinize their plan's fee structure, demand transparency, and advocate for better, lower-cost investment options. He emphasizes the paramount importance of leveraging any employer match, as it's free money, and where possible, consolidating old 401ks into low-cost IRAs or new employer plans with better options. This chapter empowers employees to take proactive control of their retirement savings, transforming what could be a leaky bucket into a powerful wealth-building vehicle. Key takeaways. 1. Many employer-sponsored 401k plans are structured to benefit providers more than employees, often through hidden or excessive fees. 2. Opaque fees, example administrative record-keeping and revenue sharing, and limited high-cost investment options are common issues in these plans. 3. Historically, the lack of fiduciary responsibility by many providers allowed them to prioritize their own profits over employee benefits. 4. It's crucial for employees to actively scrutinize their plan's fees, advocate for better options, and leverage employer matching contributions. 5. Rescuing your 401k involves becoming informed and taking control to ensure your retirement savings are maximized and protected from unnecessary drains. Chapter 5. Oh, Can You Really Trust? Pulling back the curtain on the tricks of the trade. In Who Can You Really Trust? Tony Robbins tackles one of the most critical and emotionally charged questions for any investor: how to find reliable and trustworthy financial guidance. Building upon his exposé of hidden fees and retirement plan pitfalls, Robbins directly confronts the pervasive conflicts of interest within the financial services industry. He asserts that while there are genuinely ethical and competent professionals, the industry's commission-driven structure often incentivizes advisors to prioritize their own earnings over their clients' best interests. Robbins meticulously pulls back the curtain on the tricks of the trade, which include confusing terminology, using jargon to obscure costs and complexities; product pushing, recommending high commission products, example annuities, mutual funds with high loads, even when lower cost, more suitable alternatives exist. Misleading titles, advising clients that appear professional but don't denote a legal fiduciary duty. The suitability standard, explaining that many advisors are only legally bound to recommend suitable products, not necessarily the best or lowest cost option for the client. The central distinction Robbins makes is between brokers or registered representatives and fiduciary advisors. He unequivocally champions working with fiduciaries, those who are legally and ethically bound to act solely in their client's best financial interest, putting client needs above their own commissions or firm's profits. The chapter provides concrete questions to ask potential advisors, warning signs to look out for, and resources to help investors find professionals who truly serve their interests. Ultimately, Robbins empowers individuals to be their own best advocate, understanding that an informed investor is the best defense against industry exploitation. Key takeaways. 1. The financial industry is rife with conflicts of interest, making it difficult to find truly trustworthy advice. 2. A crucial distinction exists between fiduciaries, legally bound to act in your best interest, and brokers, held to a lower suitability standard. 3. Tricks of the trade include confusing jargon, pushing high commission products, and misleading professional titles. 4. Robbins strongly advocates for working exclusively with fiduciary advisors to ensure your financial needs are prioritized. 5. The chapter provides actionable guidance on vetting advisors and understanding the warning signs of self-serving advice, empowering investors to be their own best advocates. Section 2, the Unshakeable Playbook. Chapter 6, the Core 4. 4 principles that can help guide every investment decision you make. In the Core 4, Tony Robbins introduces the practical principles that form the bedrock of an unshakable investment strategy, derived from his interviews with the world's most successful financial minds. He stresses that true financial security isn't about complex algorithms or market timing, but about adhering to a set of simple, yet incredibly powerful guiding principles that empower investors to navigate any economic climate with confidence. These principles are designed to cut through market noise and provide clarity for every investment decision. The Core 4 principles are: 1. Don't lose your financial freedom. This isn't a call to avoid all risk, but a directive to protect your downside. It emphasizes understanding your risk tolerance and structuring your portfolio to withstand inevitable market corrections without forcing emotional, detrimental selling. The focus is on resilience and preventing catastrophic losses. 2. Asymmetrical risk-reward. Seek investments where the potential upside is significantly larger than the potential downside. This involves intelligent allocation to assets that have historically offered robust returns while managing risk effectively. It's about finding opportunities where the payoff for being right far exceeds the cost of being wrong. 3. Tax efficiency. Leverage tax laws to your advantage, recognizing that taxes are a major silent killer of returns over time. Utilizing tax-advantaged accounts, example RRSPs and TFSAs in Canada, or 401ks and IRAs in the US, and tax-efficient investment vehicles is crucial for maximizing net gains. 4. Diversification and non-correlation. Never put all your eggs in one basket. Diversify across various asset classes: stocks, bonds, real estate, commodities, industries, and geographies. Crucially, invest in non-correlated assets, those that tend to move independently of each other, to minimize overall portfolio volatility and enhance stability across different market conditions. Robbins asserts that consistent application of these 4 principles is far more critical for long-term wealth creation than trying to pick individual stocks or time the market. They provide the fundamental framework for building a resilient portfolio that can weather any storm and compound wealth consistently. Key takeaways. 1. The Core 4 are foundational principles for building an unshakable, resilient, and long-term investment strategy. 2. Don't lose. Prioritize protecting your downside by understanding risk tolerance and building a portfolio that can withstand market corrections. 3. Asymmetrical risk-reward. Focus on investments where the potential for gain significantly outweighs the potential for loss. 4. Tax efficiency. Actively minimize taxes on investment gains by utilizing tax-advantaged accounts, example RSPs, TFSAs, 401ks, IRAs, and efficient investment structures. 5. Diversification and non-correlation. Spread investments across diverse asset classes that move independently to reduce overall portfolio risk and volatility. 6. Adhering to these principles is more impactful for long-term success than attempting to pick individual winners or time market movements. Section 2, the Unshakeable Playbook. Chapter 7, Slay the Bear. How to navigate crashes and corrections to accelerate your financial freedom. In Slay the Bear, Tony Robbins directly addresses the inevitable bear markets, significant prolonged downturns that strike fear into the hearts of most investors. Building on the preceding chapters that establish the inevitability of market cycles and the importance of an unshakable mindset, this chapter provides a direct, actionable guide on how to not only survive, but actually thrive and accelerate your financial freedom during these challenging times. Robbins frames bear markets not as a threat to be feared, but as the single greatest opportunity for wealth creation for those who are prepared and disciplined. The chapter emphasizes that the bear market is a time when assets are on sale, offering a chance to buy quality investments at significantly reduced prices. Robbins champions a counterintuitive approach. While the masses panic and sell, the truly successful investors strategically buy. Key strategies discussed include embracing volatility, understanding that downturns are normal and temporary. Strategic rebalancing, systematically selling assets that have become overweighted, often those that performed well before the downturn, and buying more of those that have been hit hardest, thus buying low and selling high by design. Increased investing. If possible, investing more during crashes to take maximum advantage of discounted prices, dramatically lowering your average cost basis. Dollar cost averaging, continuing consistent investments regardless of market conditions, which naturally leads to buying more shares when prices are low. Robbins uses compelling historical data to show how investors who held firm or even increased their investments during past crises, example 2000, 2008, emerged significantly wealthier. The ultimate message is that mastering the bear requires discipline over emotion, viewing fear as a signal of opportunity, and adhering to a long-term plan that sees beyond the immediate storm. Key takeaways. 1. Bear markets and corrections are the greatest opportunities for accelerating wealth and achieving financial freedom. 2. While most investors panic and sell, the unshakable investor learns to strategically buy assets when they are on sale. 3. Key strategies for slaying the bear include strategic rebalancing, selling high, buying low, and increasing investments during downturns. 4. Dollar cost averaging, consistent investing, is reinforced as a powerful tool to take advantage of lower prices during declines. Overcoming the bear requires disciplined action over emotional reaction, viewing market fear as a signal of opportunity. Historical evidence shows that those who remain invested or invest more during crises achieve significantly higher long-term returns. Section 3, the Psychology of Wealth. Chapter 8, Silencing the Enemy Within. The 6 biggest mistakes investors make and how to avoid them. In Silencing the Enemy Within, Tony Robbins shifts his focus entirely to the internal landscape of the investor's mind, arguing that psychological and emotional pitfalls are often more destructive to wealth than market downturns themselves. He identifies that the true enemy is not Wall Street, but our own primal human instincts, primarily fear and greed, which lead to irrational decision-making. This chapter is dedicated to exposing the 6 most common and costly mistakes investors make and providing actionable strategies to overcome them. While not presented as a direct numbered list in the summary, the 6 biggest mistakes typically discussed revolve around 1. Chasing performance. Buying assets that have already performed well, often at their peak, driven by greed or FOMO, fear of missing out. 2. Market timing. Attempting to predict the exact tops and bottoms of the market, which is statistically impossible and leads to missing significant gains. 3. Panic selling. reacting to fear during market corrections by selling low, locking in losses, and missing the inevitable recovery. 4. Confirmation bias, only seeking out information that confirms existing beliefs, leading to biased decision-making and ignoring contradictory evidence. 5. Over-diversification or under-diversification, either spreading investments so thinly they lose impact or concentrating too much risk in too few assets. 6. Failing to rebalance, allowing a portfolio to drift from its target allocation, leading to increased risk or reduced returns over time. Robbins emphasizes that understanding these behavioral traps is the first step towards conquering them. He provides practical techniques, example, automating investments, setting rules-based rebalancing, and focusing on long-term goals to help investors disarm their emotional biases. The chapter underscores that mastering the psychology of investing, maintaining discipline and rationality, is the ultimate edge that allows one to remain truly unshakable and secure long-term financial success. Key takeaways. 1. The investor's own psychological and emotional biases, primarily fear and greed, are often the most significant threats to their wealth. 2. Robbins exposes 6 common and costly mistakes that result from these biases. Example, chasing performance, market timing, and panic selling. Understanding these behavioral traps is crucial for developing the mental fortitude to avoid self-sabotage. Strategies to silence the enemy within include automating investments, adhering to rules-based rebalancing, and maintaining a long-term perspective. Mastering the psychology of investing, cultivating discipline and rationality, is presented as the ultimate advantage for achieving unshakable financial freedom. Section 3, The Psychology of Wealth. Chapter 9, Real Wealth. Making the most important decision of your life. In this chapter, Tony Robbins culminates his discussion on the psychology of wealth by inviting the reader to define and pursue what he calls real wealth, a concept far deeper and more fulfilling than mere financial accumulation. He challenges the conventional view that wealth is solely about money in a bank account, arguing that true richness encompasses time freedom, emotional well-being, vibrant health, and critically, a sense of purpose and contribution. This chapter is centered around what Robbins presents as the most important decision of your life, the choice to proactively design your financial future and, by extension, your entire life, rather than leaving it to chance or external circumstances. Robbins emphasizes that once financial independence is established through the principles outlined in the book, the ultimate freedom it provides is the ability to live on your own terms and to give back. He highlights that the deepest human fulfillment comes not just from what we get, but from what we give. The chapter encourages readers to shift their focus from scarcity to abundance and from accumulation to contribution. He provides examples of how successful individuals and philanthropists leverage their financial resources to make a significant impact on the world, illustrating that mastery over money ultimately frees you to pursue a life of meaning and legacy. This final chapter in the psychology section serves as a powerful call to action, urging readers to make the conscious decision to apply the book's strategies not just for financial gain, but for a life of profound fulfillment and positive global impact. Key takeaways. 1. Real wealth extends beyond financial assets to include time freedom, emotional well-being, health, purpose, and contribution. 2. The most important decision of your life is to proactively design your financial future and entire life, rather than reacting to circumstances. 3. Financial independence provides the ultimate freedom to live on your own terms and, crucially, to give back. Robbins emphasizes that deepest human fulfillment comes from contribution, using wealth to make a positive impact. The chapter serves as a call to action to apply the book's strategies for profound personal fulfillment and a lasting legacy of contribution. All right, that wraps up our deep dive into Unshakeable, Your Financial Freedom Playbook by Tony Robbins. What a journey, right? We've explored how to navigate market storms, protect your wealth from hidden pitfalls, and build a portfolio that truly stands the test of time, giving you ultimate peace of mind. Remember, becoming financially unshakable isn't about avoiding the inevitable ups and downs of the market. It's about having the strategy and the mindset to thrive through them. If you're ready to gain that clarity, confidence, and put yourself firmly in control of your financial destiny, this book is an absolute must-read. This video just scratches the surface of the incredible insights Robbins shares, drawing from the wisdom of the world's top investors. To get the full playbook and truly master your money and your psychology, you absolutely need to read the entire book. You can grab your copy of Unshakeable, Your Financial Freedom Playbook, through the link in the description below. As we always say here at PowerBooks, knowledge is not power. The application of knowledge is power. So take these powerful lessons and start building your unshakable financial future today. If you found this breakdown valuable, please give this video a like, share it with someone who needs this financial clarity, and don't forget to subscribe to PowerBooks for more insights into building true wealth and financial freedom. Hit that notification bell so you don't miss our next deep dive. Thanks for tuning in, and until next time, keep learning, keep growing, and stay unshakable.